Hey, real estate agents, welcome back. Today we're going to talk about how to get off that hamster wheel. And you know which hamster wheel I'm talking about. It's the one that shows up the first of the year every single year. And if we're being honest with ourselves, it actually shows up the first of the month every single month, right? We had a great sales month. First of the month shows up, boom, got to do it all over again. Or worse, we didn't have a good sales month the month before. We still got to go get at it all over again. And so there are a couple ways to get off that hamster wheel, 3 easy tips on how to invest in real estate. So buckle up and stay tuned to the end of this video because I'm going to share what I call Moneymaker. I'm going to tell you how to get it. It's the spreadsheet and valuation that I use to build a $30 million real estate portfolio. I'm Guillermo Salas, former attorney, turned real estate agent and real estate investor, and I'm going to share every single tip and process that I use to build a massive real estate portfolio to just fund my lifestyle. And I'm going to share every little secret I've ever created. So hit the subscribe button up there and hit the notification so you hear about these videos before anyone else. So before we get into the 3 tips, let me just set the stage. Why invest in real estate? Well, listen, you're a real estate agent, right? You already know what the market is. You've got inside information. Take advantage of it. You know which markets are growing, which markets are not growing, which ones are going to appreciate. You're studying the market, so take advantage of that. The other thing is you want to build passive income, right? It is like, if God forbid something happened to you and you can't go out and show houses and you can't go out and take listing appointments, you have something to fall back on, right? It gives you options and you're building that financial security over time. The biggest part of this is options, right? You may wake up one day and you may love selling real estate right now, but you may wake up one day and be like, man, I'm just tired of getting in my car and showing houses or getting in somebody's living room and having the listing conversation. So why not have options available, right? Makes sense? You got the insider knowledge and you're building sort of financial security for you and your family. And that's the key. All right, so let's go. Let's get into it. Tip number 1 is pick the asset that you want to invest in. And asset is a fancy word. It's like, what type of real estate property do you want to invest in? And so there's lots of things you can choose from. You can choose from flips. You can do development. You can buy lots and build on it. You can do short-term rentals. You can even buy single-family homes to rent. However, I have a bias. And the reason I have a bias is because I want you to be successful. My bias is multifamily. Multifamily it's a fancy word for maybe a duplex, a triplex, a quadplex. Something is sort of in that level is where I want you to start with. The reason I say that is like a lot of those other instruments or properties that you can buy, great. People get rich, they build financial freedom through them. However, they have a little bit more of a risk profile, especially for somebody just starting. And my goal for you is let's get into something that is gonna make you money, that you feel good about, that you feel confident about, and so that you won't get frustrated and want to quit. And so the cool thing is multifamily, it's diversified, right? So if you get a single family rented, well, if it's empty, right? There's no money coming in. If you've got a triplex or duplex or quadplex, generally you can have 1 or 2 vacant units and still be able to cover your bills. And then I'm going to recommend that when you go multifamily, that you do what I call a turnkey. That means it's already in a rentable condition, right? If you get something that has a lot of work that needs to be done, again, if you're investing for the first time, what do you know, right? You don't know what you don't know. And it's more likely that you will encounter something where you will make a mistake, where it could hurt your return on investment. And so turnkey investment as a multifamily is the investment I would recommend for you as a first-time starter, as somebody just getting into it for the first time, because it's already going to be making money. Maybe cosmetic changes, right? That's something add a little bit of value. And when cosmetic changes, carpets, flooring, paint, maybe some countertops in the kitchen and bathrooms are what make the most money. So redoing those, and you can increase the rent. But that's it. Tip number 1, pick your asset. And my bias is go with multifamily turnkey, because if you get those, here's the biggest reason too. If you're making money, that cash flow, if you do it right, that cash flow after a year and you're paying down the principal on the loan for that mortgage, for that multifamily, you're gonna then free up some money and some capital to do it again the next year. And then do the same thing the year after that and the year after that. And you can build a 10-year plan so that end of the 10 years, you've got 10 properties, cash free, right? Debt free. And you've got, if you could actually do this at $100,000 and have $1 million after 10 years. So there is a process and plan that we can put together to do that exactly. All right, so that's tip number one. Tip number two is conduct your market research. Know where you want to invest in, right? So tip number one is know what to invest in. Tip number two is know where to invest in. And I have a bias. Pick a place that you already know. Could be where you live, could be the market that you're focused on in your sales from a real estate sales perspective. Invest where you know, start there, because you'll know, the market appreciation, you'll know the vacancy rates, you'll know the demographics, right? Who's actually looking to live in that area and their income levels, all that stuff. So start where you know, and if that market doesn't work, right, because it's not financially viable, then start, increasing the circumference and/or picking a market and start studying it. So understanding the market is hugely important, right? You're gonna wanna know things like income level, demographics. Pick things that are, growing and appreciating potentially down the road. It has a great base of employment, right? People tend to want to live where there's a lot of jobs. Great transportation systems, lots of amenities. These are the markets that are going to, again, make sure that you've got a great potential for appreciation or value, and then also create a floor where it won't drop and it be more of a secure investment. Now, for instance, an example of what I did was I looked at, when I first got into investing, I went into student housing. And some of the stuff that I looked at was, here's a university that is growing in enrollment. And here's also a university, same university, where they didn't have enough housing to support the growth in enrollment. So there was a huge gap between supply and demand, and the surrounding areas around the university hadn't developed just yet. So I went in deep, man. I took the money that I had, whatever money I had, and I didn't have a lot, and I bought a bunch of investment properties. And then when I stopped having money, I didn't have enough money to buy the next one. I then went out and had my friends and family buy them, earn commissions on it, use those commissions, and buy even more investment properties through them. So that was my first foray into investing. And as things developed and the market changed, you sort of got to keep in touch with that. I saw that the operating costs for those were increasing. There was more competition coming into the market. Vacancy rates were increasing. And so I divested some of those, and I looked at hey, what I'm seeing is people are moving out to the burbs. And this typically happened right around where COVID was happening. People wanted outdoor space. I saw that people were staying longer in the suburban markets. And so they weren't turning over every single year, where I was having to fill a vacancy every single year. In the suburban markets, they were staying 3, 4, 5 years, and I would save the costs of turning over the units. And so I switched my portfolio, some of it, over to suburban markets, and then the rents are also were growing there versus. So the point is, tip number 2 is understand the market, understand the demographics, right? And accumulate some tools that you can use. One of the greatest tools that I use for understand the market is Rent-O-Meter. Again, I don't have a horse in this race. I don't get any income from this company. But what it does is it allows me to analyze the rents for a specific market by just plugging in the address, and it'll shoot out, boom, here are the average rents, here are the median rents, and it saves me a bunch of time in terms of understanding where the market is. That's tip number 2, understand the market and do your market research. Tip number 3 is crunch your numbers. Know how to crunch your numbers. And so this is a different exercise. If you're a real estate agent who is typically working with people who buy their primary home or sell their primary home, there's a lot of emotion involved in that transaction, in that process. This is the opposite of that. This is completely logical. Numbers rule the day here. So we're not buying properties unless the numbers work. In fact, we're not even looking at properties unless the numbers work, right? It's an inverse, right? We're gonna actually sit down and work out the numbers and crunch the numbers. And if it works, cool, then we'll go tour it. And when we go tour it, it's only to verify whether our assumptions are correct. And so how do we crunch your numbers? Well, I didn't know anything. I was a kid from the hood. I didn't know anything about this stuff. And so one of the things I did is I went out and learned by reading a book. And I think a great book for beginners is Rich Dad, Poor Dad by Robert Kiyosaki. He lays out the mindset behind it. He lays out the formulas and all the terms that you need to know to feel comfortable with investing in real estate. And a lot of the stuff I'm going to cover in subsequent videos as well. However, in the meantime, let's just talk about generally what it looks like. So there's going to be money that comes in, and there's going to be money that goes out. And that's simple, right? So when we talk about cash flow, coming in is the rents that you get on a monthly basis. Easy peasy, right? Then you got to subtract from that operating expenses. Operating expenses are things like taxes, insurance, utilities, repairs, maybe buying, you got to pay a property manager because you don't want to be taking on another job hear me, listen to me this. Financial freedom is not about switching from one thing to another that now absorbs all your time, right? This is about buying right so that you can then hire somebody else to do the thing that you don't want to do. And so a lot of people make the mistake of buying and not factoring in property management costs, and now they've just bought themselves another job that ultimately they may not like doing. So in operating expenses, know that you got to put something in there even if you plan to property manage it yourself initially, okay? So those are expenses. You got your income, minus expenses, and then the third part typically, and I'm really making this simplistic, is the mortgage, right? A lot of us don't have all the cash to just buy a property with cash. So we're gonna have to go out and get a mortgage. And so your debt service, whatever your principal interest payment would be for that month. And at the end of that is what's left over, your cash flow. And my recommendation, again, tip number 3A or 3B, is don't ever buy a property unless it cash flows at least $1, right? It has to cash flow at least $1. But that's one of the common mistakes that people make is like, oh, it's got potential. Well, let other people buy on potential. Let's buy on real numbers, right? That's where a lot of people get in trouble because they'll get in there and then they can't make the numbers work. It's not cash flowing positively, and now they're sinking money into the property. So when we look at an analysis and crunching the numbers, we're looking for cash flow, we're looking for appreciation, and then the cool thing is the tenant is paying down your principal on your loan, so we're looking at your pay down on your principal. So when you look at those three components, that should give you an aggregate rate of return, and I usually try to, look at something that's at least a combined 17%. Because if it's 17%, there's a concept out there called the Rule 72, then your money will double every 4 years. So that's tip number 3. Crunch your numbers, know the numbers, understand things like cap rate, net operating income, right? Absorption rate, vacancy rate. Here's tip 3B. When you're doing your analysis, make sure that you put a large enough number for a reserve. And a reserve is just like, hey man, something's gonna go bad that you didn't anticipate. It always happens, right? Don't be so optimistic that we're naive. Something's gonna happen that we don't expect. The roof's gonna leak, hot water heater is gonna go kaput before we thought it. So you wanna put a percentage when you're figuring out your expenses. Remember, income, expenses, operating expenses, in that expense number should be rainy day fund, right? Something where it goes bad so that you're not pulling money from your cash flow to fix the property. That's making a negative, right? Negative return. You have already reserved in a separate account that rainy day fund to take care of those those things that come up that are unforeseen. So that's it. 3 easy tips on how to get started investing in real estate, right? It's number 1, pick the thing that you want to invest in. 2, pick where you want to invest in. And 3, get real knowledgeable on how to invest in real estate. Make sense? It's awesome. This is the path, one of the ways, the path to financial freedom. So, like I promised, I have created what I call it the moneymaker. It's really my baby. I've created this thing over the last decade, a spreadsheet that I use to value every single thing. So the things I was telling you, like the income, the expenses, the operating expenses, there's a bunch of formulas already built in. All you have to do is put a comment in the video here down below, say moneymaker, and I'll send you a free copy of the spreadsheet. And I'm going to cover in future sessions how you invest with no money down or virtually no money down. So make sure that you subscribe up there, hit that notification button so you hear about the videos before anybody else hears about them. And in the meantime, go out there and cause and create miracles. Have a great day.